Hello, everyone. This is Wade here. I want to welcome you guys to today's webinar. Hope everyone's having a decent day, providing most of the world's under lockdown. Hope at least we could get on this webinar and talk about something great like trading. So glad to see you guys on. So just want to do a quick sound check, make sure that you guys can hear me all right. You just simply type in a Y. I want to make sure we got a good sound connection. All right, thanks, Randy. Appreciate it. Okay, looks like we're good to go. So, anyways, we're gonna kind of keep following the theme that we started last week, or I mean that we've been doing every week. We're gonna go over the volatility report. Seems like everyone's been liking the volatility report overall. So I think it was definitely good. Glad we put that out, and we're got that coming out every week. So. First thing we're gonna do, we're gonna have Shane cover that since he's the one that puts that together and does the research on it. So we're going to have him go over the this week's volatility report, go through what we're looking at, what the what the potentials are. In the meantime, if you guys have questions, I'm going to come on after him and maybe look at some live markets. I'm going to just kind of look at your guys' questions as they come in. So just kind of be thinking about what you'd like me to cover as far as the software and the markets, and I'll try to write those questions down in the meantime. One thing I do want to say, if you guys are new, if you're a new subscriber, uh, try to keep any kind of like support related questions, like if you are still trying to get your software installed or license keys or anything like that. Make sure that we don't really like to address those things on this webinar. We like to keep it based on learning and educational content. So if you guys can send those, if you're having any kind of issues or trouble getting set up, please send those requests to support@tradeats.com, and we'll help you with those after the webinar. But other than that, anything educational regarding the software, that's what we're going to try to do. And normally we do get quite a few questions, so I apologize if I can't get to all of them. I try to pick out the ones that I think the majority will benefit from. So anyway, just kind of give you, that's what I'm going to be trying to do. So with that being said, I'm going to go ahead and we'll turn it over to Shane, and he's going to take us into the volatility report for this week. So go ahead, Shane. Let's get into that.
All right, thank you, Wade. And hello, everyone. Hope you're all having a great little start to your week. So what we're going to do now is go through the volatility report. Looks like all of you can see my screen all right. So anyways, I've already got NZD Frank up, so we'll start at that, even though it's at the bottom. So one of the reasons why this was chosen is, it's pretty straightforward. It was really interesting going through checking on all of the majors and minors. It seemed like the New Zealand pairs were all kind of, we had that big push on a lot of different pairs a few weeks ago, and we've just kind of been kicking back and forth at the bottom of it, bottom or top, whichever way it went. And now we're finally went through a daily box. We broke out, so we're going to be looking for some movement from a lot of these pairs at this point. Anyways, the first of them being, like I said, NZD Frank. So let's go ahead and jump over to that one. One point that we made inside of the report on this pair is that it just broke out, and we haven't really had a clear reaction to the expansion line yet. We just broke out. It's we're still waiting to see if it's gonna roll back over, come down to the expansion line, and give us some sort of reaction. So what we would be looking for is for it to either continue up here. We could look for it to maybe kick back and forth and then continue up long, which is probably all of our least favorite thing for it to happen when it just breaks straight out of a box. But other than that, where you'd be looking for it to come back to this expansion line and either rotate off of it and continue up long, or stall out and then continue pushing down short. It seems a little bit more likely that it would go long at this point, just because I don't really see many targets down to the short side in the form of liquidity lines. But there's no reason why settle for anything less than perfect. So we'll just wait, give this one a little bit of time. It'll probably, I would say probably later on this week, this is going to give us some good opportunities. All right, now jumping over to pound New Zealand dollar. Hold on 1 second. Okay, so pound New Zealand, we did not have a directional bias on this one either. None, wait for reaction to threshold price. We had a similar setup to this last week where on CAD yen here, where it broke out of the box, it came down and it started testing the expansion line. And that's really ideal when you have an opportunity to get in real close to the expansion line after it's already, for lack of a better term, matured and broken out of the box. So you're still within that range, and there's still the best trading is ahead of you when you see something like that. So let's go ahead, jump back over to the chart. So we can see we got close to it. It started kicking back and forth a little bit here over on the hour. Not really a whole lot going on right there, but at this point it is staying above it. Kind of, we got a little bit of a balance. We can wait a little bit longer. If it comes down at all, you can always test an entry real close to it and literally manage your risk off of the expansion line. I'd probably wait though, because if it comes down and whips through it a little bit, it may just kick back and forth, up and down. So yeah, I'd give it a little bit of time on this. One thing to note is we had a little bit of a reaction to the previous expansion line that we had back here. We had a little bit of a rotation to the short side. So that says short, but then this bounce says long, so it's a little bit conflicting. It'll clear itself up. We just have to give it a little bit more time. So yeah, just consider giving this one a little bit more time as well. It'll probably play out faster than our other pair, but yeah, just give this one a little bit more time and wait for that reaction to clear up. And then finally, this one was probably the ideal. This is Aussie New Zealand. Go ahead and pull that guy up. So this one worked out pretty much perfect. Our directional bias was long, and it's this one is probably the furthest along in terms of maturity when it breaks out of the box. So we broke out, got whipped up, and then came back down, and then have a very, very clear rotation off of the daily expansion line. So when you get something like that, it is a clear indication that long orders are being protected. So you can manage your risk right off of the expansion line. It's a little bit far gone now. It's pushed up, 142. When we released the report, I think it's pushed up about 90 since then. But yeah, you can manage your risk off of that expansion line, and it gives you your overall direction. As far as profit targets, where it would, we want to pay attention to it if it gets up into this area of this previous range back here. It's going to hit a little bit of turbulence once we get over there, just because of all the orders that are through it. But yeah, if it continues long, I would definitely look for it to get back up to this price level. One thing that I did want to go through, one that I really wanted to make the cut, but unfortunately the spread is just a little bit higher than we would normally see, especially at the peaks. It can be around like 200. Right now it's not too bad. In normal times, it's usually around 20s, but gold. So gold just broke out of a daily box. I don't know how many of you have been tracking it recently, just since it's been kicking back and forth in a daily box, but it's been really, really difficult trading in this. So yeah, just wanted to bring up, the only reason it didn't make the cut is because the spread is higher than normal. So there's definitely going to be a little bit more risk involved in this. But if you guys are, or for any of you that are, continually tracking gold, it's a pretty good, now it's starting to open up again. So it's a lot safer than it was for the last few weeks. Anyways, that being said, that pretty much wraps up the volatility report. I see a few comments in the questions panel. I'll go through and answer some of those. But with that being said, I'm going to go ahead and hand it back over to Wade.
All right, Shane, thanks for taking us through those. Some good signals this week. I think that, it was mostly featuring stuff with NZD, but definitely some good stuff there. Um, Hang on, guys. Let me get my stuff set up. 1 minute. I got to transfer over my presenter thing here. One moment. Okay.
Yeah, just wanted to add one thing. We have a few comments coming through. A few people were able to get into some of the pairs on the volatility report. Looks like, Mary says it was nice to wake up this morning with a profit. It's like good stuff. Good stuff. Love that.
That's what it's about. With the volatility report, um, it's like I said, we're looking for stuff that's fresh, but you guys still need to use your brain and what you know about this methodology to interpret what's going to happen. You have your management points, and we're looking for specific behavior. So that's why it's called a volatility report or a volatility signal. We're it's right in the sweet spot, for it to move, but we still need to manage and we need to watch, what's going to happen. So that's it's good to see you guys are taking advantage of that and you're treating it the right way. I just need to figure out how to, okay, here it is. Okay, you guys let me know you can see my screen and we're good to go. So Y is fine. All right, looks like we're good to go. That's cool. I'm watching the comments. A lot of good comments for you guys that caught some of the trades. Good job, Richard, on Aussie NZD. It's sounds like you're crushing it. Good job. Mary too. Good job, Mary. Awesome, guys. So going back to Mary, I did see, Mary, that you said you want to take a look at Euro USD 4 hour, 5 minutes. So we'll start with that. I haven't seen a whole lot of other requests for pairs because I could do, if you guys want me to do some top-down analysis like we do, starting with the monthly, going down to the 5 minute, let me know the pairs and I could do a couple of those too, and we'll just kind of explore those and see where it leads. But just type in, or if you want me to look, if you took a trade or you're looking at a specific setup, give me the currency pair and give me the two time frames, or at least the two main time frames, your entry time frame and your directional bias time frame, so I can put those on the screen. Let me know kind of what you're looking at. But I'll start with Euro USD. Okay, Mary, I just saw your comment come through. So she's looking at the 5 minute and the 1 hour, and we'll talk about that time frame pairing in a second. So I'm going to start with Euro USD, but yeah, if you guys have anything else, type it in while I'm talking, and then I'll address. Or if you have any other questions about the software or trading stuff, then I'll get to those too. So Euro USD, everything's starting to move a little bit. We kind of had some lackluster trading sessions through this area here on the 4 hour, but it's starting to break, and we're getting kind of our classic entries going long. So going to what Mary's looking at, she's trading the 5 into the 5 into the 1 hour. One thing I will tell you with the 5 into the hour is it's a little close. You can do it, but you're going to get in more situations where you're going to have to buy the breakout or the rotation. Because for instance, like right here, there's some great trades under expansion, just coming back, great trade placement right here, back here. There's been a lot of great trades. And this one working on, if you bought the rotation here, you're still working on getting this one back up to expansion right here. So this is an ideal environment, but here's the one thing that's with the 5 into the hour. In these situations, you'd have to be buying these breakouts or buying the rotations here, because sometimes unless the hour is running like crazy like it is right now, sometimes you're not going to get a full run under the line without it turning the hour. You're going to get candles like this right here, And in the moment, that can feel like, this hasn't happened yet. In the moment, that could feel like, oh, this is done. It's topped out. And so what ends up happening is when you have your entry time frame too close to your directional bias, then it can throw you off the scent. So um, overall, there was still plenty of trades in here. Especially when this thing first broke out of the box down here. You had a lot of good opportunities. Actually, let me see. So what candle we break out? So we'll call it 6. It's like between 6 and 7. So let me see. Okay, so right here, this is 715 right here was kind of your first grade A opportunity below the box, and that puts you into the run. So that was really the first opportunity right there. If you got in after that, you'd have to rip this rotation. These are kind of my least favorite right here because it's already kind of gone off. If you do trade these rotations long, you got to manage your risk like right under this low because you're pretty much expecting the momentum to kick in almost immediately. You don't want to manage these and then manage the trade back at expansion because there's a good chance today was we had really good momentum, but just as a general rule of thumb, if you're trading just these rotations, you got to be careful because you very well could come back into the base, which is the expansion level right here. So make sure you're not risking all the way back to there. It's not really a good thing to practice. This one right here, you can buy these breakouts, but these are the breakouts. You have to treat these similar to what you would treat this situation right here. If you buy this, you got to manage your risk, pretty much right up under the expansion level right here. Because same thing, if it doesn't go, we're always talking about we got to risk first, profit later. Let's start with risk. If it doesn't go, then if you get back to the expansion line, remember that's a decision point. We're going to see, does it bounce, and then it goes. If it starts getting through, well, it could be a full-blown reversal. So you have to see, okay, now we're through the expansion line. Let's see how it acts. Do I get another entry? Okay, there's a good entry. I get a solid rotation. Now I'm coming back up through expansion and I'm on my way, similar to how these are working out, back up through expansion, which is, ideal. So if you can buy these breakouts though, because I know some of you guys, especially when you're new, you miss trades. You see it just breaks out of a box and it just goes. And you're like, well, why can't I get that? You can get that. But when you're buying the momentum as it goes, you're not buying the pullback under expansion or above expansion. If we're in a short market, it's pretty much, it's got to go right away. So it just comes down to tight risk management in that specific situation. But obviously, you can see nothing is better when we try to spot those grade A opportunities. Right here was that first test coming up. Even if you got it right through here, if you trade the grade A opportunity, pretty much protect your risk right here, and now you've legged yourself into whatever the 1 hour is going to pay you. So, and I understand they don't all turn into monsters like this. They don't. But if you have a good enough entry point, even if you take losses on 3 or 4 grade A opportunities, as long as you manage them right, you should still be way ahead. But you need to be prepared to ride the trend if you want to do that. You got to be prepared to really see what the 1 hour, where's the 1 hour headed, and make the most out of what you're going to get out of the hour run. Don't be just jumping in and out on the 5. So anyway, that's what I see. We got some more comments. I'm going to look at those here in a second. So my recommendation, again, you guys could do whatever you want, but I think personally the 5 into the hour, it can be good if you're experienced with it. You don't get thrown off by situations like this as easy. Then by all means don't change. But I tend to recommend it to push people towards the 4 hour into the 5 just because of the farther separation. And then if you do want to back up the 4 hour, what you can do is back that up. Let me see here. So you take a daily like this and you back up, you see if what you're seeing on the 4 hour lines up with the daily. Now the 4 hour is much closer to the daily, and this helps when you're looking for momentum. If you're looking for the next candle to continue or the follow through, when you can line up the time frames closer together. So entry, rule of thumb, you want entry to be a farther distance away, but momentum you can pair if you want to, you can pair them together. So you'd see where the daily was coming around. So you see that, okay, we got people looking at the daily time frame making moves because they see the rotation, and you got expansion, so you're above expansion. So that's showing you could see that these two time frames work together to show you follow through in momentum. And when you pair those together, similar to right here, right, you see what we had, the daily was red under expansion. So you know that you got people on the daily ready to sell the market. As we get under expansion here, you have more trust in the follow through because you're trading the 5 into the 4 hour. But if you're going to feel good about the 5-minute entries, you have to feel good about the 4-hour follow through. It's going to keep trending. And the way you do that is you compare it to something a little bit closer like the daily. Hopefully you guys see that and that makes sense. Same thing right here. Daily goes up. Even though daily's against expansion, it's still a significant enough time frame, but there it is. That's that same signal. That this is the one we're looking for on the volatility report most of the time, but there you go. There's your follow through. So when you have that 4-hour closely related to the daily in the same color, you see the turn happening. We have a box. You can see the architecture of the daily turn right there. You start holding right there. That's go time right there. And then you feel much better when you get something that whips out like this. If you're just looking at the 1 hour, you can be like, oh no, this thing's rotating, and you may not want to get in on that turn. But if you see that the 4-hour is sandwiched in with the daily and you're making momentum, then you're like, all right, it's time to go. I'm long, I'm long, I'm long, I'm long. That's where you get that extra confidence. And so it definitely helps if you sandwich closer time frames to help see the follow through and the momentum, but make sure your entry time frame is spaced enough apart so you can actually get entry opportunities. If it's too close, like if you're trading the 1 hour into the 4-hour, it's too close. By the time the 1 hour can make a small move, and you'll never get an entry opportunity. You need the smaller time frame to give you the architecture, to get the pullback and have enough to work with. Okay, so I see we got a bunch of comments here. So let me read for a second, and then I'll figure out what we're going to talk about here next. Shane, if you want to add anything to that in the moment here, feel free. I'm going to be a minute or two, so hang on.
Yeah, we're just getting more comments in. Like Michael said, he's up in a good trade on Aussie New Zealand. So it seems that one really did pretty well with a lot of you guys. So that's great. That's great. I love reading these comments.
All right, Nikki, I see your comment here. I'm going to take a look at your pairs. Looks you're trading the hour into the daily, and we got CAD franc and NZD yen. So we'll take a look at CAD franc first. If I could find it, there it is. So in the daily, going back to what I was just saying, that like trading the 1 hour in the daily, that's decent because how many 1 hour candles are in a one daily candle? 24. It's basically one day. So you're going to get enough candles within a daily time frame typically to get enough architecture to actually enter the trade on the lower time frame. Okay, so the daily broke out long. You can see we had a pullback on the candle right here, and then we started going long. So that's that whole price settling debate that everyone has. When do you know price settle? Well, sometimes it does, sometimes it just goes, but you got to trade it either way. If you take an entry up here and then you see a pullback, okay, well, you're like, okay, we're going to come back probably to expansion or around this level, and I'm going to get some more information. So you just got to be prepared to make the call. If it does decide to pull back. So, and again, right here, you can see with the 1 hour, plenty of opportunity under expansion. But if you change that to a 4 hour, what ends up happening is that the 4 hour is now too close to the daily. and you don't have near as many, you know, opportunities. The only way you could have really got into it, maybe, I think it may have even been too early right here. Um, but you could see basically the only way you got into this is if you like bought this rotation right here, and after that point, there was probably a ton of opportunity already on the 1 hour to enter this trade. So you can see what ends up if you get your entry too close to your supporting time frame, you lose the architecture you need to make those decisions. So okay, let's take a look back here, and without knowing where you got in, Nikki, I'm just going to kind of walk through what I see, just so we can move quickly here. We broke out on uh, zero candle, which was, what's the date on that? 4/3. Okay. Okay, so we basically broke out through here. Had a possible entry right here, up through expansion, came back. So we're getting kind of a classic expansion pattern here. Expand low, or expand high, expand low, expand high, expand low. In these situations, this is that whole master pattern, you know, ideal situation playing out. One thing that you got to do when you see this expand high, expand low, this whipsaw action going on, the way you don't get destroyed like most other people do in this situation is you're only trading one side of it. You're only trading the buy side. So right here, you buy this, you buy this. You're only buying, and the reason you're only buying is because you're stabilized in your supporting time frame. You know, we expect that when we get a breakout short out of the box, that this is one half of the whipsaw, you know, and when the other half is going to come because the directional bias is long. So we expect that whipsaw to some degree. That's why we buy below expansion. That's the tipping point. We're expecting that the higher time frames going to basically kick in, and we're going to catch that expansion leg back up, even if it's the whipsaw action. That's the way we're trying to get put into the money in those situations. So there was good opportunities there. If you caught this one at the rotation puts you in the money. You're above expansion right here. This one, you know, you're probably expecting, you know, more to come out of it, but it does come back. In these situations, if you don't close up here on the liquidity line, you know, especially if you're trading the 1 hour, you know, you're looking for more pips than just from here to here. Typically, you're looking to get a decent run out of it. Um, so, you know, on this one, I'd call this a break even realistically for most people, because it's going to come back. When you're above expansion, you already caught it even close to here, but it's already put you into profit. You don't want to give that back. When you get back down to here, you're closing, break even, get back in down here, or see what happens as it breaks through. You got a liquidity line here. You're rotating off the liquidity line. Your higher time frame still intact. You're buying again right here. Get back up. Now we're back up through expansion. So the profit we're looking for initially is from here to here. Now you're up through the expansion level. You got some architecture forming, but you notice even as you broke low out of this box, it held this level. So that's what we want. We want to buy under expansion, get through the expansion you're working with, and then hold above and let the price, even if it goes sideways, we don't want this wick to really go below this level. That's where we're going to manage it. And then now you've legged into that trend on the daily. Now, if you did catch this entry, once you're in profit, now you need to start asking yourself, what's the potential of the daily? And you can look at the previous liquidity lines for profit targets. But right now, if you're in this trade, you should have a profit protected, you know, somewhere in the realm of in here, depending on how this looks like it was a pretty aggressive turn. But you're probably, you know, somewhere in here, and you're protecting your profit above here. So pretty much your stop goes right here, you lock in those profits, and you pretty much ride this for whatever it's worth and try to manage, you know, what you're getting here in real time with this new architecture. You want to see that you're still stacking boxes long, that generally the price action's holding above the last expansion lines. It's all giving you clues that are in the favor of your trading idea, which should be long. So until those clues start changing and going against you, then you start thinking, okay, should I get out? Possibly. But overall, you know, that's your leg in was down here from what I can see. So, um, But yeah, it's pretty textbook. Below expansion, we're selling. Above expansion, we're buying. And you want to catch it when it's fresh. Right now is the time where you want to catch it. This could turn into 10 days of a run very easily. We could run all the way back up to this expansion level, but the key is figuring out what's going to happen when you're close to the expansion box, when you're close to the contraction box right here. You don't want to, like this one right here, you got below on this candle, we had a new expansion line, boom, you're trying to find an entry in this neighborhood, there it goes. You don't want to watch this go and then start getting aggressive right here, because you're already, how far away are you from that expansion level? It's already pushed a significant amount. Now, I'm not saying don't trade it, but what I'm saying is don't go heavy. Don't put all your chips on the table after you haven't gotten any of this. If you got a lot out of this, well then fine, you've earned your right to really trade the trend for all it's worth. But don't see something that's ran 2, 3, 4, 500 pips and then start going heavy, just because the probabilities are starting to fall out of your favor. You want to catch it early. So anyway, it seems like a pretty good setup. Like I said, the only way I saw to leg into this and sustain was on this rotation right here, off that liquidity line. And if you nailed that, then you're pretty much, you've earned the right to see what this thing pays. If you want to stay in, stay. If you want to move your stop up as you get new architecture, maybe we get another big run. If you do, I'd probably take my stop and maybe put it up in this neighborhood up here at these expansion levels, and try to lock in profits based on the architecture. The market's going to determine what the deal is. So as the market lays down the architecture with the boxes, with the expansion lines, we have no choice but to adapt. We're not going to impose our own, traveling stop loss, or trailing stop loss. We're not going to try to, you can use those things if you want, but overall, the market's going to tell you what the sensitive points are. It's up to us to identify them and work within those boundaries, and it'll just be what it's going to be. So, all right, so let me look at the other pair that you had on there. NZD yen. Okay, NZD yen. So we had the rotation right off here. I think this was one that Shane went over here. So the rotation off of there, pretty textbook on that. I haven't, as far as the hour into the daily, I haven't seen anything too great to leg into this trade, as far as being below expansion. This is a little bit more technical here, and it's not the basic, strategy that we're generally teaching you to get started. But looking at this situation, there are some of you that have more experience. I know you would have saw that we came through this expansion level. We came down and tested, because the expansion lines work together. They're giving you an overall framework, so you can look at previous expansion lines to see how it behaves, and based on knowing that we're rotating on the daily, I do know that we have some people that would have been comfortable buying that rotation right there, and especially as it came through liquidity and saw that we're not getting a huge reaction off that liquidity level. That could be a clue. Most people though are gonna wait for a new box inside the run. We're stacking long on the expansion levels. They're going to see this breakout. This was a decent opportunity. We came down, we tested expansion, and then buying that rotation long to leg into the trade was a decent opportunity. We have another one right now. I'd wait to see green on that before you get in, but this is the same situation right here. We're looking for, remember, the trading idea is long, obviously. We're trying to figure out how are we going to get into this long run that's transpiring on the daily safely. That's but the idea is the daily going long. That's the trading idea based off of what we see right here. So the clues that are in line with that trading idea would be a breakout long, hold at expansion and then rotation, that's a clue right there. That's a clue in favor of the daily trading idea. So that when you find those clues, those are potential entry points, as they work out. And if you did get that one, then you're in the money. But this one's not quite, like I said, not quite as straightforward as as the previous pair. Now, if you did trade here, again, you could be looking at the daily here. Uh, I do have some people, I know Shane, this is one of his favorite things he likes to do is he likes to see the reaction the minute he starts seeing on the lower time frame that we're whipping and we're holding, to buy that on the rotation and then just set your stop right there and just trade it based on the daily architecture. You could do that too. So, that may have caused you to buy some of these rotations and just have your stop set down in this neighborhood. Obviously, that's a much bigger risk typically than waiting for the momentum to kick in. But, compared to the daily, if you're entering right here and your risk is right here, if you're trading the daily, you need to be prepared to be in that trade for days. This is not something you get in and take 20 pips off of. It's not worth the risk on that level. You can't be risking, let's say you caught it on the rotation or right here, you're risking there's 100 and 16 pips roughly to below that expansion level. You don't want to get 20 pips out of this. You're expecting this to come up, break this high, and get up into this neighborhood before you start thinking about exiting this trade, for the risk that you're going to take on to just trade that daily rotation. So anyway, that's my take on it. But overall, it looks like it's starting to mature. Either way, if it does, if it does fall apart and it doesn't take off, you have your management points right here. If you would have bought this trade, you'd have managed it right under that risk or right under this low right here. If you bought this rotation right now, if you're looking for a rotation in this, we are getting a little late in session, so you do need to be prepared that nothing's going to happen. But if we do get green, you start to see some green come through here, you could buy that and basically expect immediate, off that rotation that we're immediately going to get up through this level. The minute you do get up through that level, you're going to manage it right under that expansion line, and see if you get some follow through. If you don't get follow through and it comes back through, that's going to generate a question. Why? Why am I not getting follow through that level? And that's going to say, well, you got to start questioning, what's going to happen and give it more time and wait till you get a new expansion line, wait till something else happens, and then either get back in or you're going to get enough information against your trading idea and you're going to leave it alone. So you're going to put together the puzzle as it happens. Okay, so let me keep looking for some questions here. Hang on one moment.
One thing I wanted to throw out there, Wade mentioned how that daily rotation is one of my favorite trades, which he's definitely not lying. I love that trade. It's my type. Um, Anywho, regarding the risk on it, probably wouldn't have taken that one. That is a lot of risk, unless you're getting in real close to the expansion line on the daily, and it's like around, I feel comfortable around like 20 pips or so. Once you start seeing it start to bounce off of it. But 110 pips, that's not something that I'd be jumping into with that much. So I just wanted to clear that up a little bit, that's too much risk.
Yeah, definitely got to have the risk to reward ratio intact. Okay, I see a request. We're going to take a look at oil. I have oil uh, on this setup here. Let me see.
Right above gold.
Ah, there it is. Okay, and the time frame was 4 hour into the monthly. So I don't know if you're talking about WTI crude or Brent, so I'll look at both of them. Okay, so this one,
Hey, Wade, can
directional,
you expand the 4 hour just a little bit? It's a little small.
oh, sorry. Okay, so monthly is definitely short. This is a pretty aggressive move from what I see right here, and I don't follow this market really at all, so I'm just kind of shooting from the hip right now. But you know, we're under expansion. I see we got a pretty solid reaction off this liquidity line level right here. We're breaking short on the 4 hour. So it's a decent trade. However, that's a pretty aggressive short. And I do know that we just took out this low right here. So, you know, I'd be careful. I'd be careful on this one. You know, obviously the setup, uh, you know, there was a lot to have happen back through here. So if you didn't get much of any of this, wow, some crazy runs. If you didn't get anything out of any of this stuff right here, then right here you can see that we're kind of starting to chop back and forth. Right here out of this box expansion, right, we've expanded high, expanded low, expanded high, past that high. So you see that master pattern starting to play out with this is the point of origination. So you know the short point, you know, and trading out of this box short, I definitely can make an argument for that. You know, and obviously your target would be down here at this expansion level, but just understand that the probability, remember, the farther we get away from expansion and the trend has already happened, the less and less and less probability you're going to have, you know, or in the more probability you're going to have of finding a reversal. So again, we want to get, we want to get more aggressive up in these neighborhoods. You know, when you're close, if you're trading the monthly, we want to trade it close to this neighborhood, and you want to be careful once you get, especially when you broke a predominant low like this. Not to say it won't keep going, but you could see that if you, but when you guys look at a market, I don't care what the market is, and you prepare to trade, one of your jobs is to look at how many trades you've missed. If you see a run that's happening, how many entries have I already missed, so that you can calculate, okay, if I was trading this from the rotation, from the origination, you know, of the expansion, you know, where would I likely be? And then you need to trade based on that fact of what you're, you know, what you're going to risk. You know, needs to be based on if you've already gotten anything out of that trend. A lot of people, the big mistake they make is they see that moves that have already gone by, they get excited and then they get beat up in the turn. And that, you know, you don't want to do that. You want to look at markets when they're coming out of a box. That's why we do the volatility report, something that's fresh out of here. You know, on a monthly, you would have got the volatility signal when we got out of the box in this neighborhood, and this is a monthly chart, granted. So you know, this a volatility signal on the monthly could take months to actually transpire, but you know it's coming. Same thing right here, out of the box. How many months was this rotation? But then it went into a monster up move. Um, so it's same situation. And you guys got to understand that this works on all time frames. It's the same thing over and over and over again. Um, so you know, it's the same principles. Uh, anyway, but so as far as this chart, like I said, that I would just be careful. I think that there's a good chance you can work this down to right here, but in a trend that's matured this far, I think probably I'd only be trying to shoot for base hits to expansion, like from there to there. I wouldn't expect a huge trend. I wouldn't be waiting for a huge trend to play out past this low. It basically just here to here, be happy, done. I'm going to take a look at Brent too. Similar situation right here. Price just cratering. That's why I think I heard on the news that back east in the eastern states, they got gas like below 99 cents a gallon or something. Crazy. I think it's still like 3.50, $4 a gallon here in California. I don't honestly, I haven't gotten gas in a while because we can't leave. But yeah, crazy what's going on with oil right now. And I think a part of this is that the Saudis are basically, and I'm not by any means an expert on oil, so I'm just talking right now. But from what I can ascertain from the news is that the Saudis are using this whole economic crisis that we've been put into to make a run on our shale oil producers and basically flood the market with cheap oil. And so on top of that, they got the power to do that. And right now in the U.S., basically, nobody's driving anywhere and not filling up. So, if they're running the price down so low that the local producers, U.S. producers can't make a profit, it's kind of from what I understand, it's a power grab situation. And that's what is causing so much craziness in this market. So just again, I don't take that with a grain of salt. I don't follow these markets very much, but anyway, that's what I saw, the little bit I have seen. This one right here, if you're shorting into this, again, we snap past the low down here, and there was already all these runs that happened here. So it's, again, same situation. If you are trading, I'd be looking, this was a pretty strong reaction right here. And this is something that we can learn from regardless of what you guys are trading. Again, you're looking for clues in continuation. If you see that right there, and then boom, this big high volume move going against that, that's a possible, what does that look like? This is something that I'd probably say, okay, this, I'm going to leave this market alone, and hopefully you got something out of this, and out of these runs right here as they transpired. One thing I will say is that the 4-hour is a little bit, it's pretty far away from a monthly. So when you're trading these bigger time frames, you may want to reinforce the 4-hour with a daily. So trade the 4-hour and the daily as a pair, because ideally the 4-hour, and again, this is preference, but on these higher time frames, I mean, preferred, my opinion, I like trade the daily into the monthly, because then you're looking at roughly 30 candles depending on the month for one monthly candle. So I feel like the 30 period separation between time frames seems to give you enough architecture. In fact, let's just take a look at that for the sake of it. Okay, so right there, that was the sweet spot right there, and then the rotation right here, and then you're in for that whole run. Whereas the 4-hour, it was, I mean, you can still do it just fine, but like I said, for these long trades, sometimes the daily is best to pair, or just use the 4-hour and the daily together. Even though they are close, you're really looking, if you're trading the monthly, you really need to be in for these types of things. I mean, that's what the whole point of trading the monthly is, being in for, you got 30 days in a month. If the month is going to run, you want to catch a 15-day move, or 2 weeks of that meat out of that trend. So anyway, just my opinion though. You guys could do whatever's been working for you. If if the 4 hours working good, then by all means stick with that. But anyway, that's my take on that. So let's, I'm gonna keep reading. We're gonna try to get a few more questions. We like to keep these around about an hour. So it's 10:52 right now. So we'll see if we can get a couple more questions. and then we'll probably wrap it up. So hang on. Okay, really good question from Matthias. Uh, really good question. Never gotten this question before, but he's talking about heavily correlated pairs, basically looking at, um, would we take two pairs that are heavily correlated, look at the architecture on both pairs, and then compare them together to figure out what the story is on one or the other pair, for a trading opportunity. And the answer to that is, look, if you're looking at the correlation between pairs, you probably have been doing that a long time, even before you were using ATS. And if you're used to doing that and getting good information from it, then there is, something you can take away from that. I wouldn't recommend anybody starting out to confuse themselves with more than what is necessary. And my opinion is, again, my opinion, but you got more than enough architecture on the screen to do well with. And I'll tell you right now, the people that do the best, and get off the ground the quickest, focus down on one or two pairs, with usually one time frame setup, like the 5 into the 4 hour, or the 15 into the daily, or the daily into the monthly. If they're trading longer time frames, they stick with those, and they don't change. That's a huge part, uh, of all the hundreds and hundreds of people that I've had the privilege of working with and around over the years. um, the one thing I've learned, the people that are getting ready to blow up have a bunch of complications on their screen. They have I remember we had, a trading room long time ago, me and my dad and Shane, my brother, um, and you would know who's on their way out the door because they would come in. They'd be like, "Hey, look at that! I just found this thing, this new indicator. Oh, I just found this," and every day it was something different. It's a new currency pair. It's a new this. It's a new that. They're like, "Oh man, this guy's getting ready. He's on his way to a spin cycle." You could almost predict it perfectly. Um, so, that, again, if it works for you and you're used to taking in a lot of those and you can look at the correlated pairs and do that, fine. This is ATS is as much about, it's a chart map. So I learn things about this system from subscribers all the time, things that I never, really picked up on, but it's a little nuance that they've picked up on that gives them good clues and helps them. That's what it's supposed to be, a stable framework. And I encourage people, to be creative within the framework to find innovative ways to figure things out. Um, but if you do cause too much change, the downside to that is that, you're lost in that never-ending system development cycle where every week you're trying something new, rather than if you just stuck with the currency pair, one or two pairs and the time frames that you can effectively manage based on your schedule. If you just stuck with those and never changed, that is consistency. And the more consistency you bring to the screen, the more consistency it's going to give you back. The more change you bring the screen, the more change it's going to give you back, and usually not for the better. So just something to think about. But anyway, that was a great question. And so the final answer, yes, you can do that. If you are used to looking at correlated pairs, there may be something you can get from that. But anybody new, you don't need to do that. I would just say stick with the architecture that your screen that you get from your broker's data stream. Work within those parameters. You'll have more than enough architecture there. As long as you wait and you're patient for things to clear up and to get a clear trading idea, then there's more than enough there to make the best of it. Okay, I'm gonna probably take one more question here, so I'm gonna scan here and then we'll probably wrap it up. So hang on one sec. Okay, here's what I'm gonna answer quick from David. He said, basically, what do I mean uh, if you get into a trade and you're in profit on the following days, use to trade it for all it's worth is basically what my words were. What I'm saying is that if you catch a trend early and you're able to be in on say part of the first leg on your higher time frame, or you're in close, like let's just say you got into a trade and like you were at the turn, like you nailed it, and you got a big profit. Let's say if it's the um I don't know, let's say you're trading the 4 hour into the weekly, or you're trading the 1 hour into the daily, and you caught a swing on the daily, with the 1 hour, and you're up 50, 100 pips, and you see that it really took off. Well, that could be the start of a 500 pip move. We don't know. We just have to trade. But so what I say is, if you already have 100 pips in the bag, you've earned the right to trade it up through the top. So that's what I mean when I say trade it for all it's worth, because you already have a ton of the house's money to play with. Whereas if it's already ran 100, 150 pips, there was a good entry, you missed it, and now you feel like you're missing out, the whole fear of missing out. Then what I'm saying is, don't get caught up then trading in the bottom or the top when it starts whipping around. You could still trade that, but trade it lightly. Don't go so heavy on your position sizing. I mean, depending on what your guys' equity management's up to you. But to just understand that the farther the trend goes, the less and less probability you have of these trades coming around. It's eventually going to turn. So that's what I mean. Trade it for all it's worth when you got early money in the bag. You're early to the trend, then you've bought the right to take on more risk. Same thing with pyramiding into a position. Uh, a lot of stock traders and things, when they look at buying breakouts on stocks, they'll test the position with a small trade, or a smaller trade. If they get in the money on that trade, they'll use whatever gains they have in that trade to finance a bigger position. They'll pyramid into the overall trade in stages. And that's because they've already earned the right. They let a small trade finance their next big trade. It's just a money management technique. So that's kind of what I mean in the same realm of that, of what they do is the earlier you are to the trend, the better. However you slice it. That's what we're looking at. That's what we're looking for.
Hey,
Okay,
Wade,
yeah.
real quick, we had quite a few comments about requests to take a look at a pound dollar. Could we go ahead and take a look at that on the 4 hour and 15 minute?
Yeah. Yeah. Let me look at that. What were the time frames?
4 hour and 15.
Okay.
Maybe get rid of that extra NZD chart.
Yeah. I don't know why I'm not getting. Oh, never mind. There it is. Okay, 4 hour and 15. Okay, long on the 4 hour. Entry right here on this rotation. Don't know if you would have got it. I mean, you can get it if you see you're holding a previous level of structure right here, like at expansion, you can get it right there. But most people are not gonna, they're gonna hesitate to pull the trigger. So we'll call it right here. Managing the trade right now. If you bought it right here, you're generally, there's two management points I see right here. Is you could manage it like right here below the rotation, which we did. Sometimes you'll notice that it does come and test that. Um, or you can look for the previous levels of structure. Pretty much, you see that we held right here. So putting a stop loss in and around this level probably would have been, the better place to do it, just to be safe. Of course, this is hindsight. You got to work through these things in the moment. But let's just say you did buy right here, you may have got stopped out. But if you see the reaction and you see that we're holding and we're still holding above this reaction point right here, you could have got back in on this last breakout right here. One thing you got to keep in mind though is that we are coming out of session. So you can still get in this trade. We still may get some breakout long here, and it'll put you into the money, but it may go sideways later. So just keep that in mind, is that volume's kind of falling out of favor here. So in a situation like this, you'd be looking to get in the money pretty quickly, like you are right now if you would have bought, on this rotation. Breaking out long out of the box. You're trying to get up through here. If you can get up through this level before the volume really falls off for the day, then I would, at that point, you've kind of earned the right to let it run through the afternoon session. But like I said, what you're looking to do definitely is get through this expansion, and I would say stay above this expansion as well. You want to see that you're working within these two expansions, even if it swims sideways. Eventually, hopefully, it'll break long and put you into profit, because the 4-hour is definitely long. The overall trade looks like there's a good chance that we can come up and hit this expansion level right here. That would be kind of my initial profit target. Overall, we're in a long trend. You can see we had a big reversal down here. So, I would say it's extremely reasonable that we would at least get to here. So how many pips is that from where we're at? About 60, 60 or so pips. Worth it. Risk right now. Since you're above expansion, I'd probably manage it, right below here, looking at how it's forming. So right now, if you got in, say right here, and your risk, you got about a 15, 16 pip risk to make a potential 60. It's not bad. So anyway, yeah, that's my take on that particular one. So all right, I'm gonna try to look for one more question here, just to kind of keep it rolling here. There, we got someone on here. Oh, David said gas in Kentucky is 99 cents a gallon. Oof. Cheap, man. You guys ought to be stockpiling gasoline over there. Then you can sell it back when they raise the price. Uh, so Mary, I see you want to go through as far as the steps of what you need to take a trade. I would say go back and watch the basic training videos in the online course, the basic strategy videos, and just watch them a number of times, because there's a lot in there. But basically, the steps are really simple. You have your time frame pairing. And I'll just tell you the time frames that I would stick with. You could do what you want, but if you're trading shorter time frames, 5 or the 15 into the 4-hour is good, and use the daily to back up the 4-hour if you're trading in session. So 5 or 15 into 4-hour, use daily to confirm 4-hour. Follow through. Make sure that your 4-hour, if it's above expansion, you're only looking for buy trades. If it's below expansion, you're only looking for sell trades. And then on the 5 and the 15 minute, or the 5 or the 15 minute, if that 4-hour is above expansion and the daily is supporting it with the daily color candle, then you're going to be looking, if it's above expansion, every time the 5-minute gets below an expansion, for instance, or like right here, 15-minute, you see the 4 hours above, 15-minute forms a box, we go below. This is where we get into criteria. The minute you break through this box, doesn't mean it's ready yet, but that's where we get into criteria. Now we're looking in the zone between here and a previous expansion level. You're looking at the overall architecture to find where the possible rotation point is, because at the end of the day, what you're counting on is that the 4-hour is going to follow through, that you're going to get another green candle and it's going to surpass the high. All we're trying to do is find a safe entry into the trade over here. So remember that the trade is your higher time frame. It's over here. That's the trade. This is just a tool to find entry on the lower time frame. And it's just whether you're going long, you're going under expansion. If you're going short, you're going above expansion. But it all starts, in order to find a trade, the number one most important thing that you must start with is you have to figure out, you have to feel almost as if that you would be comfortable getting in on the trend or on the higher time frame with no entry. So you take away your lower entry time frame, you almost got to feel good enough that you would just jump in. Same thing right here where we broke short right here. You can see we came through and then we had kind of sideways action, but this is showing a rejection of this level right here. You can see that it's not turning. So that is our clue that, yeah, this is probably going to go. When you see a candle start to move past those lows right here, you would almost want to jump in on that. You'd almost just want to get in. And when you feel that way on your higher time frame, when you feel like, oh, I just almost, the same thing right here. It goes long, you're above expansion, you get down, this is a rejection of this level, even though it didn't get too close, it's a rejection. There's no interest in this market wanting to go down to here at this point. When you start seeing green right here, you would almost just want to buy this without the 15-minute as help. So when you start to feel that way about your higher time frame, that's when you jump over to this chart. Until you feel that way about the higher time frame, then you really don't want to, look at it yet. So that's where I would say, as a beginner, learn how to forecast the higher time frame, and when you do that well, the lower time frame pretty much will take care of itself. And when the higher time frame starts going sideways and you feel what you feel like is a good setup and you take a hit on it or you get knocked out, wait, sit back and just wait to see, does the higher time frame turn into something that's a mess. If it does, we want to try to avoid these as much as possible. You want to wait for a fresh expansion, and then you'll have a fresh opportunity to trade away from expansion. Same thing is right here, same thing is right here. So that's really ideally what we're looking for. So
Just to add on to that, just kind of what happened with Aussie New Zealand dollar. It seems like a lot of people got into that and are riding it, and it was one of those things where you go and look at it, and it was a super clear rotation right off expansion. It's like, you look at it, it's like, wow, that's that thing's about to move long, whether I'm in it or not. So I might as well jump in, and then then finding your entry on your smaller time frame is easy because you're just very clear that it's about to go long, and you just got to do your best to figure out how to get in.
yeah, absolutely. So it's just about having that sense of knowing. And guys, if you can take one thing from these webinars, and you guys, I know that you guys that are new, this kind of new, you're trying to get your head around it. But if you go back and watch the archives, the old webinars, you'll notice that it's basically the same thing every week. We're going over the same exact stuff. Uh, the better job you do on your higher time frame, the easier job you're going to have on your lower time frame. And don't get frustrated when you don't get it right. Um, we have people that come into this program and they get on, they see the basics, they start doing the basics, and it works really well. They start, and we will get testimonials like a week in, and people are like, I can't believe how amazing this is. But they don't understand the market is going to go through cycles. Your higher time frame is eventually going to go into a box. When your higher time frame goes into a box, it's going to be terrible trading on your lower time frame. So they haven't understand that there's a time, you know, one week will have a really good week, but you need to be on the watch for weeks that are, eventually going to go sideways, and you need to steer clear of those weeks. Go on vacation, do something else, spend time with your family, do something productive other ways. Wait till you get a fresh expansion. It's uh, the whole thing that we talk about with the volatility report, or using ATS assistant. Wait till you get the expansion signal on your higher time frame. Then it's time to go to work. That's when you want to get aggressive. Take what you can out of the trend and then leave it alone. So, but definitely the better job you guys get, take it from everything, is learn that higher time frame, learn the cycles, and when you feel like, okay, this time frame's really behaving nicely, then you move over to your lower time frame and you try to find a leg into to the trend that's happening on the higher time frame. Until that happens, save your money. There's a comment on here. how do you speed up um, how do you speed up the your trigger finger? How do if you're looking for action, there's well, all the casinos are closed right now. You're kind of you're out of luck. So you'll have to take it out on Forex for the moment. But generally, it's not about the amount of trades you're in. It's about the quality of the trades you're in. So don't feel like if I'm not in a trade, I'm not being productive. You don't need to be in a trade to be productive. Most of the productivity of trading is waiting and understanding. That's your biggest job as a trader. You only want to deploy capital and take on risk in situations where it makes sense. And it'll make more and more sense the more time you guys spend with ATS. You'll see, there is a reliable framework here for you to base your decisions off of, but it's not going to happen overnight. And that was kind of the point I was getting to, is we do have people that come in and they're just on fire the first week. It may have been a really good trending week, but they don't have the experience yet to avoid the sideways. The minute you start feeling like, okay, things aren't getting any follow through, you back off and you let that higher time frame resettle. That's where it's time to move to the sidelines, and they haven't experienced that yet, and they're just totally, they have 1 week, can't believe how amazing it is. Then they send us an email and say, I don't know, I'm kind of discouraged. It's like, well, you haven't spent enough time. You got to run through the cycles. You have to. You think that the markets are just going to trend perfectly all day, every day? That's why you have boxes on your higher time frame chart. Even though it could go sideways a little bit before the box appears, you're going to get clues on your lower time frame before that happens, and you are going to take some hits around the top and bottom of the trend on the higher time frame. It's part of the deal. You got to pay for information. That's the cost of doing business in this business. So anyway, I don't want to belabor that too much. I'm not your parents, so
Oh,
you guys.
Wade, real quick, I wanted to add to that point. I mean, we just had those massive moves where basically, I mean, we had a hard time or I had a hard time putting the volatility report together because everything had already moved or was in the process of moving. There was 1 week where there was obviously a lot of movement, but I could only find two pairs that were fresh out of the box because everything was trending. So, everything's been trending, and I've been getting a few more emails in the support. Just wow, it's been a little bit tougher this the last 5 or 6 trading days, and it's, kind of it. We're just going through the market cycles, where we went through a big trend, and now we're hitting the tops or bottoms of all these different pairs, and it's just kicking back and forth, and you just have to, it just kind of is what it is. We got to wait for it to get going again. So it just happens to be on a lot of different markets that's all happening at the same time, just because of some of the outside influences in the world. So just wanted to throw that out there that don't feel bad. Everything was trending. Now we're kicking back and forth, a little bit harder to trade right now. Just the way the cycle works.
Yeah, and you guys got to work through the cycles on the higher time frame. Don't get, just because your higher time frame is not paying as easily, don't get bored with that pair, because right about the time you get bored with it and you think like, oh, there's nothing happening on this, you're going to go find something. That's about the time that the pair you were following is about to break out, and you're going to miss that perfect, grade A type opportunity to enter the move. So you just go through the ups and downs with the pair. That's Forex. A lot of people, just to make a quick correlation with like stock trading, I'm not a huge stock trading guy, but I do know that people, they look for catalysts that create movement, such as earnings reports or just any general news about a company. For instance, one of the last things, I don't trade too many stocks, but I took a trade on Tesla not too long ago when the Cybertruck came out, and Elon Musk is sitting there presenting, and they throw that steel ball at the window, and it shatters the window, and everyone's like, oh, and the stock dropped. And I was like, oh, you got to be kidding me. So I bought Tesla after that, and I do this very passively. It's um, uh, not near as intricate as trading Forex with ATS, but I thought, okay, that's, I think Tesla is definitely gonna be a company of the future. So if you're building a passive portfolio in stocks, it's not a bad name to own. But I thought this is gonna be fun. Stock dropped, but it didn't change the fact that Tesla's like taking over They own the electric vehicle space for the most part. So, but anyway, and sure enough, it turned around and kept going in trend. But so my point is that people trading stocks, they look for catalysts like that to create change, and irrational behavior, then comes in the market, which also comes along with more volume. You're actually going to get more movement, more change. The change creates opportunity. In Forex, that's much more difficult because it's not every day that a country goes out of business, or something happens, or, like what we're experiencing. These swings are generated based off of all the money moving around from this global craziness that's going on economically. So that's the catalyst. That's what's moving it. But what we have, you got to look at these boxes that we have. Those are like the IPO of the Forex market. That's the miniature news announcement, that's going to be the catalyst for movement. When you get an expansion out of a box, that's why we call it a volatility signal. That's like it's like someone's offering a new IPO that's, that everyone wants to get in on, and the white line is the deciding point between buying and selling of which way it's going to go. Hopefully that makes sense. But that's in Forex. This is, Forex is like the ocean. The stock market, we always used to say this, is like the pond, and Forex is the ocean. That's how much the difference is in volume. So, but we don't have, when you're swimming in the ocean, there's waves everywhere, and it's just like you're trying to find the ground and the sky. Whereas stocks have basically, they go to zero, or they go up. So you're basically just managing it from, where it falls apart, or the IPO release price. But usually they'll dip. Uber released and cratered. So you have that IPO release price, and that's kind of their, expansion line for to make a correlation. But in Forex, we don't have that. You're swimming in a range of hundreds, if not thousands of pips. So the way that we get our ground and sky for the moment is those white lines. That's your IPO release price. That's your catalyst. That's where it all starts for the moment, and then we manage it around those positions to, to figure out, are we going to go long or go short? Thankfully, we could trade it both ways. So, it's all up for us, providing we're on the right side of the trade. But we're looking for that volatility signal. We got to get aggressive around that so we can be early to the trade, and then we scale back as everyone else finds out about it. So hopefully I didn't confuse you guys with that correlation, but that's what we're trying to do, is we're trying to create that framework, that ground and sky, so we have these solid reference points so we can, effectively trade day in and day out. So all right, guys, I'm gonna leave you with that. Sorry I went a little long, but I appreciate you guys being on, and heart goes out to any guys dealing with difficulties, in this time. I know economically it's probably going to be the hardest for everybody, not being able to leave. I don't know, we're going to have to see how this bailout stuff goes, but anyway, I appreciate you guys still being on. And one of the good things, I said it last week, is that as crazy these things are, we got to be definitely grateful that we know about trading, and that we have something to work on, because at the end of the day, this is a skill set that you can take anywhere with you in the world. It's not easy by any means, but it's worth it. So, this is in volatile situations like this, everybody else is panicking. You have something that you can really focus on, and if you're just learning, you have something you can be truly hopeful for, to get good at, that doesn't rely on having a bunch of employees or having a bunch of overhead, or anything, licensing, all that. You're kind of off the grid in a financial sense. So, there's no better time right now, especially with what you can learn from this volatility that's happening. There's it's a good time to be trading. Let's just put it that way. So, all right, guys, thank you again so much for being on. We will plan on seeing you guys next week, Tuesday at 10 a.m. Until then, everyone take care, and we'll talk to you later. Thank you so much.